news was last week dominated by concern and panic in many quarters over the alarming depreciation of the Kenya shilling against the US dollar, euro and sterling pound. The home currency falling past the 92 shilling barrier and looking like it was not going to stop. The last time the currency fell so sharply was around 1993 and 94 on the back of a major financial scandal, and in 2008 after the post-election violence. Could there be another scandal unfolding, or what could be the reason behind the massive capital flight? Also in the program, we feature an entrepreneur who has learned how to make money from her hobby. And stay tuned to find out if it's your question that will be answered by our expert in studio. Remember, you can send in your question and comment to the email address ktnbizweekly@standardmedia.co.ke or send them to 8040 via text message. Good evening and welcome to this week's edition of KTN Business Weekly. I'm Michael Oyer. The Kenya shilling slid by more than 14% against the US dollar in the period January to June 2011, and by more than 10% between April and June alone. Speculation abounds over the cause of the rapid depreciation as pressure mounted on the central bank to intervene and stop what industry players described as an alarming depreciation that is already being felt in the price of goods in supermarket shelves. Our feature looks at events surrounding the shilling, effects on the economy and the way forward.
Exactly a week ago, June 22nd, the Kenya shilling fell to an all-time low of 92 shillings and 5 cents versus the US dollar, a level last seen in 1994 when the economy was grappling with the Golden Bag scandal and lost more than 600 million shillings, or close to 10% of the country's total wealth produced in a year at that time. While the level elicits a bitter taste in the mouths of many Kenyans who were active players in the economy then, it threatens to starve a whole new generation who have watched the price of food skyrocket in a matter of months against constant or dwindling incomes. The price of maize meal, for instance, jumped 36% from 95 shillings in April to 130 shillings in June, and though blamed on a scarcity of the commodity, there seems to be no respite soon, as removing duty on imported maize is unlikely to result in lower prices over the weak shilling.
Since the beginning of January, the shilling has weakened to the euro by 21%. It's weakened to the pound by 16%. It's weakened to the dollar by 15%. And only last week, the shilling was actually voted as one of the 5 worst performing currencies worldwide. That's the bad news. The good news is the regulator seems to know and understand from the reports we're reading in the media what's driven the shilling where it's gone. And he has said it's arbitrage and it's speculation. And our position is, I think it's time for the regulator, that is central bank, to stop backing and to bite.
Indeed, the home currency was ranked 3rd worst of the world's worst performing currencies so far this year, after Suriname's dollar and the Maldives rupiah. And while it has recovered slightly this week to trade below 90 shillings to the dollar, the worst is far from over, and fuel prices are set to increase later mid-July as the effects of a weak currency continue to be felt in the economy, with a resultant knock-on on other commodities.
We were hoping that June may have also ended up more competitively from an average point of view, but the fundamentals are not reflecting that at all. We're talking per litre, 5 shillings a litre, bearing in mind that the margin itself on kerosene had actually been reduced to around 4 shillings a litre. So already just on that amount, you're already completely negative.
Prices on shelf have only changed for food products. The pricing of other products, household products, all other consumer products, you'll start to see the change in pricing really happening in August, September, as we approach the peak Christmas period when a lot of consumers spend their money. Because on average, most manufacturers hold inventories of about 90 to 100 days, which is very high compared to other markets, but it's because we have onerous, cumbersome logistics through the port of Mombasa, through road haulage. So we hold it 90 days, about 3 months. So this issue of this depreciation of the shilling has really aggravated in June. So you count July, August, September, and you can rest assured that the last quarter of this year, in terms of consumer goods manufactured under Kenya or imported, there'll be a spike in price. So we should prepare for a really expensive Christmas.
Although economic fundamentals have not been very strong lately, that alone cannot justify the sharp decline in the shilling. Such a justification will come if the economy was on its way to the ICU, and since ours is far from there must have been other factors at play. Fingers pointed at loopholes in the system that bred speculation, and when banks jumped at the opportunity, the shilling went into a free fall.
The analysis that has been conducted by the central bank, of course, shows that the current level of the shilling is actually being perhaps exacerbated by arbitrage and speculation. Of course, this is what I have heard some of the commentators in commercial banks actually. And my teachers always reminded me that little knowledge is very dangerous, and I still remember that, and I still focus on that. So when I see commenters in the commercial bank treasury saying this is not speculation, they don't seem to know that. I still remind them that in Shakespeare Hamlet we say that those who are confined into a nutshell and still proclaim themselves as king of infinite space always wake up and get into the world and see that it's much larger than themselves.
Arbitrage refers to taking advantage of a price difference between two or more markets, striking a combination of matching deals that capitalize on the imbalance and making a profit from the difference. In the Kenyan case, central bank is seen as partly to blame, having allowed treasury bill rates to climb above the central bank rate, meaning that commercial banks could borrow from the CBK using the overnight discount window rate of 6.25%, then turn round and lend the same money to the government at 9% through treasury bills. Similarly, commercial banks could borrow dollars, convert this to shillings at a certain rate, then convert it to a somewhat weaker international measure and go round such that when they come back to the shilling, they have a handsome profit. In the week ended June 8th, banks borrowed 30.04 billion shillings from the overnight window, while the amount went up to 56.42 billion shillings in the week ended June 22nd, in a sector that is traditionally not very active. In the week ended June 22nd, overnight borrowing rose to a substantial 127.92 billion shillings. This meant that banks were making a profit of 2 shillings and 75 cents from every 100 shillings from the arbitrage opportunity.
4 large banks have been noted to be holding very large overseas positions, and these positions do not seem to reflect the trading fundamentals. And of course, this type of exposure will put pressure on the exchange rate, on the domestic exchange rate. And their positions are largely associated with the group company overseas, and of course other clients. And of course, we will restrict them from any arbitrage using the domestic currency.
Every regulator in the market needs to start biting, because they seem to have a lot of information, but there's really no firm. Like I'm sure there's something happening in the central bank, but everybody's waiting to really see what will happen to these 4 banks or 3 banks which are being quoted, to see what will happen. That will avoid somebody trying to play the same speculative and arbitrage, to take the speculative and arbitrage positions that affect the economy.
Owing to the expected effect of a weak shilling on the country's economy being a net importer of goods, pressure has also been on the central bank to intervene and stop the shilling depreciation, but the regulator has maintained its position that it will not intervene.
Intervening in the current environment through injection of foreign currency will actually lead to loss of foreign reserves without actually solving the problem, and we will actually show why, because we can actually show and prove to you that there is arbitrage in the market, and obviously that arbitrage, we cannot let it be confirmed through speculative behavior. What we need is to come up with a sustained policy solutions.
The central bank has blamed inflation, pegged at 14.95% as at the end of June, as driven by food and fuel prices that are beyond the central bank control, and defended its tight monetary policy stance as containing currency depreciation. Kenya operates under a floating rate regime where monetary policy is independent and will affect relative prices, including the exchange rate. It allows for a continuous adjustment of the exchange rate in line with the demand and supply conditions of foreign exchange in the economy.
Perhaps in future can consider further tightening of monetary policy if at all inflation is not stabilized or is not tamed. But we are seeing signs, as we talked about last time, that even though inflation will not come down drastically, the signs of having tamed inflation will come down, and we are working on the inflation expectations.
Some of these things need to be traded off in the fact that if you decide that inflation is the biggest problem, and the governor has been dealing with that, or rather the MPC in general in total has been dealing with that over time, then the extent to which you can manipulate the same factors to affect the shilling gets limited, because these are things that have to be traded off. You can't keep a firm adjustment to all of them, because when you adjust one factor, especially when you adjust interest rates in order to mop up inflation, then at the same time you actually cause an adjustment on exchange rates because it affects interest rates.
In a circular to commercial banks on Wednesday, the central bank revised the overnight discount window to 8% and stated that this will be reviewed from time to time, ostensibly to contain arbitrage. Further, banks were stopped from using the money obtained from the overnight window for trading in foreign exchange reserves.
So what we do know is that, and that is the three-dimension things that we have looked at, is that the euro fears will be resolved soon, and the last 2 nights we have heard about that. 2, fuel prices are coming down. 3, we are taking measures to make our market competitive so that we see that there is no dominance in the market.
2 years ago, there was also a very serious debate in this country when the shilling was too strong. About the fact that because the shilling was too strong, what it meant was that it was hurting exporters, that it was hurting tourism. I mean the tourism industry. And I think what it shows is that the shilling fluctuation will happen. And if we open the market, that is what we must expect. What we must ask ourselves is that if you're in an industry in which you have exposure to foreign exchange, what kind of risk advice do you take, which then allows you to be able to cover all this? Now, a 10% drop all at once is what probably we should be discussing.
For now, it seems that Kenya will have to look outward for support for the shilling, hoping that the Greek debt crisis that has favored the dollar against the euro as a preferred currency by investors is fixed to revert things back to normal. Without that, the other way out, it seems, is to change the country's exchange rate policy from the floating regime, but in the meantime, tightening of belts may just be an understatement.
Time for a break now, but when the program does return, we visit an entrepreneur who is making wealth from the production of shoes and handbags, a business, she says, that began with her love for the items. That and your question answered on the other side of this break. Stay with KTN Business Weekly.
The most popular question that we receive on Business Weekly is, what business should I start? Well, today on Business Weekly, we find out that you could actually change your hobby into a money-making venture. Mary Beth is a fashion designer with extensive background in art, and Jonathan Cassette is a managing director with a love for art. They were born in Ethiopia, met in Kenya during a short modeling stint, and established their label in 2007 with the Free Spirit, a style of art and fashion.
This business we have been starting since 2007. And the point of view was Mary as my partner doing this. She was doing it in habit. Then the following day we saw the products, we saw the outcome, and it was so nice. So we decided like, oh, why don't we do it like this, have to have a line, because we always are in art and fashion most of the time. So we just came up and have decided to start the business.
The label Ziban means be on top in Eritrea's language. They are unique bags inspired by different environment and ancient tribal of many different African countries. It reflects the blue of the sky, the rich reds of the earth, the yellow of the desert, the gold color of the bush, and the coral of the sea.
First thing is you have to visualize it. What are you going to make, or what are you doing to do? Or is this a handbag, or is it a casual bag, or is it something you can wear it in occasion bag? So you have to set up and visualize that thing.
Ziban used quality leather for bags, belts, sandals, wallets, and clutch bags.
After visualizing, you have to sketch it and drawing in the papers. So how come this bag comes out, or how does it look? So the designs, you put it on a pattern. So the one you draw it in the papers, then you get back to the pattern, making the pattern.
The products are lined with cotton deep African bright colors fabric like the Gitenge, Kanga, and Kikoi.
The thing fascinating me and always attracting me to handbags are it's the day-to-day life. People always love to wear it, and especially ladies are mostly attached with it, and that's how it came up.
Most of the products they use are handcrafted with a combination of eco-free products such as recycled beads, horn, rubber sole and embroideries, all aimed at contributing to a green environment.
What we use mostly is we decide to use the local materials.
Using such products also make the cost of starting or running the business cheap, with the business partners having started with less than 10,000 shillings. We learned about this business on Facebook. The company uses social media to advertise and market its goods and also to get feedback from their customers.
Online have no limit for anything. You can market your products all over the world nowadays, like Facebook, Twitter have a big mode of advantage for it.
At the moment, the company does not operate a shop but relies on distribution to customer shops and exhibitions.
We have different stalls in different shopping malls, so we do display our things in different shopping malls. So people might know from Yaya Center to Sari Center, Samin Junction and Village Market as well.
However, the market is small, with mostly visitors from the West showing more interest in its product. Many people still do not believe in local products.
We want to see 5 years from now be on top of everybody, like how far do you take it? So we like to compete with every other designers throughout the world.
The company considers its base in Nairobi as strategic as it plans to expand to the rest of East African community within the next 5 years. And as Andy Warhol once said, making money is art and working is art, and good business is the best art.
In the market report, inflation went up to 14.49% in June from 12.95% in May. The rate of the 91-day Treasury bill is pegged at 8.99%, while the rate of the 182 and 364-day papers are pegged at 9.90 and 10.24% respectively. The average bank lending rate as at the end of May stood at 13.88%, while the average bank deposit rate stood at 3.57%. At the stock exchange, there are 3 stocks currently trading with dividends: Kapchorwa Tea, Williamson Tea and Kenya Airways. Kapchorwa Tea carries a dividend of 7 shillings and 50 cents a share, or a 5.78% yield, while Williamson Tea has a dividend of 12 shillings and 50 cents a share. Before we go, we tackle this question from a viewer who did not leave their name or where they're watching us from. But the question is, if I can spare 10,000 shillings a month, is it better to do a bank loan and buy a plot, or save and buy it later? We put the question to a financial advisor from Zimele Asset Managers.
Thank you for that question. The key consideration here is the goal objective you have in mind. If it is residential development or home ownership. If it is residential development, you might take a loan since land prices tend to rise much faster than the savings, the rate you'll get for the savings. You might take a property development loan, which will enable you to buy the plot and develop the residential units. Once the tenants move in, you can use the rental income plus the surplus to service the loan. However, if it is home ownership, you might consider saving first so that you don't burden yourself with loan repayments.
Well, that's all we had for this week. Let's do it again next week on another edition of KTN Business Weekly. Remember, your question answered. Send an email to ktnbizweekly@standardmedia.co.ke or a text message to 8040, and the team will consider and find an expert who can give you a requisite response. Well, from the entire team and myself, Michael Oyer, it's good night until next week's edition.